Good morning and welcome back to Almus Market Mornings. One theme that stood out this week is the sharp rise in long-term bond yields. The US 30-year yield touched 5.1% yesterday, close to a 20-year high, dragging down both equities and the dollar. It's not just the US. As we discussed yesterday, Japan is also seeing some strain. Now, Sony Life, which is a major insurer there, they expressed concerns over the rising ultra long-term yields and said it may sell bonds if needed to avoid the losses. That kind of cautious stance could make it harder for the market to absorb new issuances and in turn push the yields higher. And from the G7 sidelines, there's a talk of a possible Banff Accord, according to some sources, and an effort to guide the dollar lower through global coordination. Morning, JK. What's your take on the Banff Accord? First, we had the rumor of a Mar-a-Lago Accord. Now, this. How are you reading all of this?
Yeah, good morning, Swaraj. The Banff Accord, just to clarify, Banff is the place in Canada where the G7 finance ministers and central bank governors are meeting. They've already met on in the last 3 days, and now the communique. Normally, after this meeting, there is a communique that is issued, which states the discussion that were taking place, and this time probably they're expecting a shift in the language regarding exchange rate policy. Potentially that will impact the dollar movement as well. And we all know for a long time now that US is pushing for a weaker dollar overall. Uh, One of the means to address their huge trade deficit. Just to give you a perspective, last month's 1 month trade deficit in US was $146 billion. On an average, it is around 110 to $120 billion. So that's what they are trying to do. And yes, will there be an accord? Possibly yes. Will the communique state that clearly? Maybe or maybe not, because probably they don't want too much of wild movements in the market. How they will achieve if there is an accord is something that we need to speculate about. Whether there will be some policy moves, whether there will be direct selling intervention, or there will be some verbal statements. This is something, but it's very clear that something is happening in the dollar. Yesterday there was an evidence in the South Korean won, which moved actually stronger by more than 1.5% in one session. That's very rare. And before that, we know a couple of weeks back we had Taiwanese dollar moving about 8% in three trading days. So yes, something is happening on the currency front. Yes, that's the reason why despite the big rise in US yields, currencies are actually stronger. So that's one very clear thing that we can look at. Now, yes, on the bond yields, there's been a lot of turbulence. 10-year yield and 30-year yield both reaching big new highs for the cycle. And the bearishness has definitely spreading to the stock market in US, where major indices closed over 1.5% down. The House Speaker saying that chances of the new budget bill to be passed immediately remains low. And even if the bill passes, it only adds further to the fiscal concerns, because there will be further addition to the deficits and debt in the coming years. And that's not good news for US. And of course, the immediate trigger also was the Treasury auctioning 16 billion in the new 20-year bonds, which produced a very poor response, and the yield finally was 1.2 basis points above the market rate. So that means investors are really shying away from investing into new US issuances. And we know that the Japanese bond market is also already facing severe strain. There is an SOS being sent to the BOJ to step in to reduce their tapering, and also reduce the issuance of long-term bonds as well. So there is fear, in the market, this becoming a larger risk aversion. That is quite a possible global risk aversion scenario that can lead to sell off in the stocks and other financial assets. Um, Adding to yesterday's moves was the UK inflation rising much more than expected. 10-year gilt yields shot up more than 10 basis points. Of course, relatively, European bonds were for calmer, as the officials there talked about further easing with inflation remaining subdued. Latest indication came from the German PPI, which was quite softer. Now, how all this is affecting currency space, as I said, dollar is not reacting positively to the rise in the yields. There is no safe haven in the dollar right now. It's all in the yen, euro, and the gold. They have all moved higher. Gold much more than others. Yen is making very cagey moves because the BOJ official continues to talk about US and Japan agreeing that the current yen rates reflect market fundamentals. They're really trying to avoid a big sell-off in the dollar yen, which is, I think, very much on the cards if there is an accord. So dollar weakness is also exacerbated by the rumors about the G7 ministerial meeting. Dollar remains weak. In rupee, it remains in a world of its own, very subdued volatility with a slight weakening bias. Even as the dollar index breaks down and Asian currencies have been stronger, a lot of this source to our own geopolitical challenge, oil price volatility, big dollar demand for defense, restocking, and volatility in foreign fund flows. The important thing is market is held in balance, although at a higher range, without intervention from the central bank. And besides, unlike many other current account surplus countries, India may not be facing a pressure to strengthen its currency by the US authorities. So that's a good thing for our exports, at least for the time being. Although rupee will not be left behind if there is a bigger fall in the dollar index, and stock market undergoing another corrective phase in the after the big run up. That's also keeping the sentiment somewhat downbeat on the rupee. This does not mean that rupee will be in a new bearish phase, according to me, because investing world has a big interest in buying Indian assets, and it's a matter of time the related flow reverses the current underperformance of the rupee. Investors are currently cautious about the course that the bond market will take as a fiscal position in US worsens gradually, and Fed is going more and more on the guard as far as easing is concerned. The typically rupee strength is seen when liquidity position in the dollar eases, and that time may not be far off, considering that the high yield don't help anyone, least the US Treasury. So I expect some policy action from the Fed or from the Treasury to arrest the rise in the yields, and any fallout of higher liquidity or softer rate is definitely going to be the trigger for rupee, perhaps turning the tide. Technically, as I've been sharing, 85.75 holds for the weakness in the rupee. Although a temporary break can see based on flows, it can touch 86 levels, but chances look less because today's action, if you see in the Asian market, the Chinese yuan fixing has been much lower. It is below 7.19 after a long time, and that has actually led to Asian currency strengthening. Even the rupee has not been able to break 85.60 in the offshore trade even today also. So a lot of action in the currencies, Swaraj, to look forward to in the coming days after the bond market cools off. And yes, I think I hope everyone will enjoy that as far as the trading is concerned. Thank you.
Thank you, JK. And I think the world would be looking at the G7 communique, as you mentioned, that will be scrutinized for any change in the language regarding their currency policy. Surprisingly, what you again mentioned about the Korean won, it strengthened by 1.5% yesterday. And a few weeks ago, we had seen something similar in Taiwanese dollar, though in the bigger magnitude. And all of this is happening despite the rise in US yield. So something in the world of currencies is brewing, something under the covers between the politicians, between the bureaucrats. That's something happening, which is influencing the currencies, which are moving quite significantly. On the data front, as JK mentioned, two key data points: UK inflation that rose more than forecasted, and the German PPI, which was softer. Overall, the dollar remains weak, and when it comes to rupee, it remains subdued. No major moves in INR as of now. One important point to note is Chinese yuan fixing, which has been below 7.19 today, and the resultant strength in the Asian pack. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.